Well. Today SPY was down 1.65% and we are barely above SPY 430. Who would have ever thought we were going to SPY 430? Probably nobody could have ever seen this coming. Obviously, I'm just joking. This is exactly where we were expecting to go on the breakdown. And more importantly, this is exactly what we were wanting to see from the weekly chart analysis, because SPY 430 is a very critical support within this bull trend. So do not start to panic now. This is still a very textbook pullback, and this is exactly what we were looking for during the weekly analysis, was the bounce towards 450 and then still the possibility of coming down to 430. And here we are, just $1 away from 430. And on the daily chart, we could go as low as 427. And I really don't want you to start panicking as we approach support, because one of the most rookie mistakes you can do is start to get bearish when you're supposed to be getting bullish. So what I want to illustrate here, and we will go over this on the weekly weekend chart analysis, is you need to understand the bigger picture of what is going on within the market so that you're not just acting off of your emotions. A few days ago, I made a video called Am I Still Bullish? And I gave a very simple answer of no, and I gave the reasons why. And you can now see that was the right call, because that's when we were within this wedge and there was no reason to guess if we broke out to the upside or the downside, which meant that was a perfect time to just be 100% neutral and wait for the breakout. And the breakout was either going to be below 442 or above 451. And we clearly got the breakout to the downward direction. And that told us we were likely going to 430. But now that we're getting to 430 and now that we're seeing that price action playing out, this is not when you start to panic and start to think about shorting. This is when you need to cover your shorts for profit and start looking at opportunities to see if SPY is going to bounce from this level. So what I want you to understand from the weekly chart is if SPY holds 430 as support over the next 2 weeks, it is very possible that SPY is going from 430 back towards 460. And you can see we have 3 gaps to fill to the upside at 438, 447, and 455. We know gaps typically fill, so even if we go all the way down to the lower gap at 423 or even hit support at 420, it is still possible we're going to bounce and go to 460. So as we approach support, I'm not saying blindly buy the dip and get reckless. I'm simply saying don't get overly bearish, knowing that that is the weekly support and that we were actually expecting to see these prices. So when you expect to see something, it's going to be a lot less emotional when it happens, because if you were blindly assuming we were just going higher and we weren't going lower, you were ignoring the price action. So over the coming weeks, we'll see where this low ends up being. But right now from the weekly chart, we want to see if the weekly chart is going to finish out the week above 430. So tomorrow's close will close the weekly candle. So it's going to be very important for the bulls to hold 430. Or on the daily chart, it'll be right around 427. If we break below 430 and if we continue lower, then we'll be looking for the gap fill at 423 and that next support leg lower at 420. If we start breaking 430 and closing below it, that's going to increase the probabilities we're getting a more bearish scenario, and then we can start talking about bear market probabilities. But what I want you to take away from this video in a very short summary is that SPY is still in a bull market above 430. I don't care if you agree with that statement or not, but that is simply what the price action is saying. If SPY holds above 430, we are just pulling back and correcting within a bull market, and it's completely normal. You get pullbacks and corrections, and then you continue the trend, and that is all coming from the weekly chart. So write this down, put it in your trade plan, and know that's a very important level that we're coming into. And in the short term, do understand we're very oversold outside this lower Bollinger Band as we approach very critical weekly support. So I think there's a very good chance we will bounce from 430, and from there, we'll likely come back up to the breakdown at 436 or even close that gap at 438. From there, we still need to respect this as a downtrend, so we can still reject and still go lower to 427 in the gap fill at 423 and even 420. But again, that's all going to depend on price action proving it can break down below 430. And we're very oversold, so I don't expect to see that happening tomorrow. Jumping over to the NASDAQ 100 triple Qs, we were down 1.83% today, and the triple Qs are breaking below this support at 361. And just yesterday, I told you 361 was going to be critical, and below 361, we would likely see 355. So 355 is clearly on the table from the price action, and because we have the breakdown below this support, it is possible we need to go back up and test that breakdown before we go any lower. So it is possible we bounce up towards 361 or the gap fill right around 364 and then still go hit 355 or possibly even 347. So just like I just showed you on SPY, if SPY starts going down below 430 and getting to 420, we would expect to see the triple Qs getting down towards 347. And if we broke 347, we would expect to see this gap close right around 333. And obviously that's going to be a lot deeper pullback, so we don't need to assume that's going to happen. We need the price action to prove it. So next up will be 355, and that's likely going to be very strong support. And if we go all the way to 347, again, we are still looking at the probabilities that from this low and this weekly support, we will continue the bull trend to finish out the year. That's all going to depend on whether or not SPY holds 430. So on the triple Qs, watch critical support right here at 355, but knowing we're very oversold, so don't be surprised if we get a lower high bounce before we continue any lower. In order to get bullish at this point, we need to get back above 370 and start breaking out of the downtrend and getting back above a lot of those moving averages. On the Dow Jones, we were down 1.09%, and the Dow Jones also gapped down and closed below the lower Bollinger Band and broke that support right there at 340, which tells us we're very likely going to go ahead and fill this gap just above 339. Now in the Dow Jones, there's a very important critical support at 342, and tomorrow is Friday, so when we fill that gap, the bulls will want to try to close it back above 342 to finish out the week. Otherwise, we are going to lose critical support in the Dow Jones on the weekly chart. That's why I say the next couple of weeks are going to be very critical, because they're going to tell us a lot on the weekly charts. And as we know, the weekly charts are stronger than the daily charts. So in the short term, understand everything is very oversold, but we could go a little bit lower to hit some of this critical support and close the gaps to the downside. And then from there, we'll need to see support holding, and then we could bounce and fill some of the gaps to the upside. On the Russell 2000 IWM ETF, we were down 1.55% today. And again, the break below 183 told us we were likely coming down to fill the gap at 176. And we're very likely going to do that very early tomorrow. And then after that gap fills, the bulls will need to try to close it back above about 180 and close that gap to the upside. So tomorrow, there's a very good chance of a strong bounce after a little more downside to fill some of these gaps below and test some critical support from the weekly charts. On the ARKK ETF, we were down over 3% today, and ARKK looked very bearish from that rejection from 44.5, and I told you from there we would likely go down and fill the gap at 36, so that is still going to be the expectation over the coming weeks ahead. So any bounce in ARKK is likely going to find resistance below 42 and 43, and then we'll likely continue lower to fill the gap at 36, and then from there we'll see if ARKK is going to put it in a bottom or continue into the bear market. On the VIX, we were up nearly 16% today, and the VIX had the second day in a row above 15, so we are starting to see that high fear and the high panic and the high volume selling, which is exactly what we were expecting. So VIX above 15 tells you be cautious and respect the downtrend, because as you likely already know, bears take the elevator down and things can move very fast to the downside when everybody is panic selling. The next critical resistance in the VIX will be up there right around 18, and I do expect to see the VIX cooling down a little bit, especially going into VIX Crush Friday, because we are way outside that upper Bollinger Band, so expect to see the VIX crushing in the short term. On Bitcoin, we're currently down about 2%, and Bitcoin tried to hold that breakout above the 50 EMA, but as you can tell, it's failing, and we're coming back down towards support at the rising 20 daily moving average right around 26,000. A retest of 25,000 is critical support, and a break of critical support would send us down to 22,000. We could start getting bullish if we start to break above 28,000. On Tesla stock, we were down 2.62% today, and we hit the price target right on time, which was the gap fill at 256 by today. And as you can see, that is exactly what we did today, and we now have a gap to the upside just above 262. I'm not changing a thing about this projection. It's either right or wrong, and I told you when we pull back to 256, that would be a buying opportunity and likely be the higher low before Tesla started towards 290. So it's either going to be right or wrong. I'm not changing my mind. 256 needs to hold, and if it doesn't hold, we'll likely come back down towards this support trend line at 247. So 256 and 247 are critical. If we bounce from here, look for the gap fill at 262 in the strong resistance zone between 274 and 276. And if we clear all of that resistance, we're well on our way towards 290 and then 296. On Apple stock, we were down 0.89% today, and we closed right on top of critical support, which is 174. And if we continue below critical support, we're looking for the gap fill down here at 167. If we bounce from 174 and break this high at 179 to 180, this is going to look like a double triple bottom, which could easily take us to 190. But again, wait for price action to prove it. We're either going to break the range above 180 or break the range down below 174, and then you'll know exactly where we're going from there. So jumping back over to the S&P 500, this is not time to panic. You should have a plan in place for all of the scenarios, and one of the scenarios, we're breaking critical support at 442 and going to 430. 430 is the next critical level to pay attention to, and as long as we hold this support, the bulls are still in control on the weekly chart within a bull trend. And if we break this critical support and start to close below it over the next couple of weeks, then we're significantly increasing the probability we're going into a bear trend. And this is more than just a pullback within a bull trend, or we're going into a deeper correction that's going to take us down somewhere farther. So 430 is very critical from the weekly chart. That's all you need to take away from this. So make sure you have a trade plan ready from here of whether or not we hold or break this critical support level. We are absolutely crushing this market on the Stocks Channel Discord server and Bank Trade Alerts, and you can still get the Bank Labor Day sale, and I'll put all of those details in the description below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.